Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor at FinTech Futures, and for this episode we're joined by Anu Somani, head of global payables and embedded payments at US Bank. Anu, welcome to the show.
Thank you so much, Paul. Really appreciate it and really excited about the conversation today.
Excellent. Well, it's great to have you here. And just to get started, would you like to quickly let us know a bit more about yourself and your work at US Bank?
Thank you so much, Paul. So I head up what we call the Global Treasury Management, Global Payables, as well as Embedded Payments product suite. What that essentially means is when our institutional clients are looking to pay their customers, employees, business partners, or even move monies and optimize cash flows between their accounts, I make sure that they are doing it in the most process optimized, cost efficient way so that money movement aligns with their larger business goals. I've been in the payment industry for a while now, and I feel that the unique vantage point I've had is to see the whole payment ecosystem evolve through a variety of geographies as I've worked and lived and worked in India, South Korea, Switzerland, UK. So I feel like I have a very unique perspective. And I came back to the US about a decade ago, and I've been in the payments industry. So super excited about everything that is happening here. Super excited about the future that the payment industry holds for all of us.
Excellent. Sounds great. And again, it's great to have you here. And thanks so much for taking the time out to speak with us today. On the show this week, we'll be diving into the growing adoption of real-time payments in the US following the one-year anniversary of the launch of FedNow, the instant payment service developed by the Federal Reserve. We'll cover the role that both FedNow and the clearinghouse's RTP network have played in driving this growth, the key use cases for real-time payments that have been helping to boost adoption, and what's next for RTP and the US payment space as a whole as technology and user demands continue to evolve at a rapid pace. That's all to come shortly, but as always, we'll open with our news in numbers segment. This is where our guest has gone out and found a news story featuring an interesting number to discuss and get us started. So, Anu, what have you brought along for us today?
The number that I'd like to highlight is 80. And that is the percentage of financial leaders who say their company is planning to use a fintech system or a fintech platform to move money, initiate, receive by 2026. So 80% of financial leaders are essentially indicating that by 2026, they are planning to use a fintech system or platform to move money. We got this number in our 2024 CFO Insights report, which is essentially a survey of about 2,000 senior finance leaders belonging to organizations that at least generate $100 million in annual revenue, and 30% of them actually work for a business that generates more than $2 billion in revenue. Why is this important for us, the 80% number? So it's important for us to answer, first of all, the age-old question of banks versus fintechs, friend versus foe. So clearly the service indicates that we need to configure a way of with fintechs, not only to coexist with fintechs, but also figure out an ideal partnership so that we help our clients thrive in an environment that they naturally see themselves in. So that's number one. Second, we keep hearing of how fintechs are creating a distinct competitive advantage for our clients. So we need to make sure that companies who are looking to create a differentiated experience, a seamless experience for their customers, are able to do it in partnership with their banks. So they get to use what is the best of both worlds from the fintech space and from the bank space as well.
Excellent. Yeah. I mean, how big of an opportunity then would you say this embedded payments is for fintech and for banks? And do you see this a key driver for the industry moving forward?
For me, this is where the future lies, in all honesty. Historically, we have always had distinguished, disjointed experiences. So we've had typically an institutional client do their own thing, be in their business flow, process flow, whether it's an ERP, whether it's a claim adjudication system, whether it is an industry-specific treasury management system. They would do what they do on a daily basis. Then at the end of the day, they would pause, they would move on to a bank UI, UX, or sort of have their system spit out a file that they would then need to send to a bank to essentially complete their money movement activities. what we see is that this disjoint moving away. We are seeing the emergence of seamless experiences where clients have no desire to leave whatever they are doing in their process flow, and they're expecting the back-end connections to happen so that payments originating from their day-to-day world seamlessly comes into their banks and payments get executed. So not only a growth area in the industry, but a huge focus area, which is why I think about our journey in the embedded payment space started about 3 to 4 years back when we started to think about meeting the clients where they are. Now, I'm not saying that there will be absolutely no clients who would want to come to bank side or send a file. That is not what I'm talking about. But in essence, the meeting where the clients are, it talks about how we can, if a client wants to come to our portal, they absolutely will have the ability to do it. If they have an established channel where they want to send us file transmissions, we absolutely have the ability to do that. But we also see an emerging growing population of clients who just want to embed our capabilities in their ecosystem. And that's something that we have actively spent a lot of time thinking about, developing products around, and also developing a way for us to integrate ourselves and embed ourselves in our clients' worlds.
We spoke briefly last year at the Finovate Spring Conference about real-time payments and the launch of FedNow in the US. As we speak now, FedNow has not long had its one-year anniversary and currently claims to have more than 900 financial institutions live on its service. So what's your take on FedNow's first year in action, and how much of a role has it played in the expansion of real-time payments in the US in general?
I think it's an extremely interesting time to be in our space. The establishment of another major instant payment network alongside the TCH RTP network, it represents a really important step in the evolution of this faster instant money movement. One of the key things that has been the bottleneck so far is ubiquity. And for us, the more reach we have, the better success and more adoption for real-time payments in general. So the emergence of FedNow for us is one giant leap towards that ubiquity that is much needed for instant payments to become mainstream. I think on the other end, Fed's involvement also brings huge awareness, right? So we keep hearing, seeing Fed in a variety of conferences. Fed also has reach into smaller banks in more remote areas where TCH RTP network would have taken more time to penetrate. So overall, I think it's a good news story for us. More awareness, sort of increased activity in this space just leads to more excitement and more financial institutions participating and more customers knowing to ask for this. So to me, it just feels like a big step towards creating that ubiquitous adoption of faster, instant, real-time payments.
Yeah, and you mentioned the Clearinghouse's RTP network there as well. They also revealed in July that consumers and businesses sent over $1 billion in instant payments on June 28 over the RTP network, which was a single-day record. I mean, what would you say are the key drivers behind this growth then?
It's interesting, right? I would say, I think from a broad brushstroke use case perspective, the use cases are driving the most amount of volume are business to consumer payments, specifically more so within the gig economy space, within the broker dealer space. So we are constantly seeing innovative new use cases that are coming up. So if we were a decade back when we were trying to envision a brand new rail coming into existence, we had thought about how it would revolutionize and change and address some of the problems of our legacy rails. what we are seeing drivers of huge volume right now is not just addressing the problems, but the emergence of use cases and emergence of drivers which did not even exist 10 years ago. So I think it's really the new use cases that are coming forth and truly showing value that are driving the increased use and the increased demand for all of these rails.
And there's been reports recently that some more big industry players are potentially looking to connect to FedNow soon. And what do you think is next for that service in particular? And how do you see FedNow evolving moving forward?
From my perspective, it's really about, so number one, the evolution is about how do you grow the presence. So you talked about how FedNow today exists in about 900 financial institutions. How do you grow that from 900 to 9,000 to ultimate 100% reach in the US? That's number one. Second, it's about having more and more customer originated, customer created demand. So emergence of new use cases, value proposition adding through creation of new products by FIs. And ultimately, at the end of the day, it's also about unification. So if you think a bit about it from a client perspective or a user perspective, they really don't care whether the payment goes over a TCH RTP rail or perhaps a FedNow rail. So it is on us. So banks like us are creating a unique value proposition, which may be powered by both these strong rails, but from a client perspective, the originator perspective, it is almost transparent. So a customer, a client comes to us and tells us, hey, I want to pay into this bank account. And we use products like intelligent routing to seamlessly route the payment to the network that is available, the network that is most cost efficient for a client perspective. So that's where I see our growth coming in. Number one, reach. Number two, creation of new use cases. And number three, creation of a product layer that makes it simpler and simpler for our clients to use these and benefit from these rails.
Yeah, I mean, I guess building on that, I mean, is having multiple RTP rails optimal, or do you see a point where institutions are adopting each system, or is interoperability even on the cards moving forward?
Listen, honestly, having multiple rails is not a problem for me at all, right? We have had multiple rails in the wires and ACH industry. So no fundamental issue in my opinion. In fact, I think it's just better reach, like I said, better drivers of awareness. But I think, like I said, what we need to ensure is while these underlying rails may exist, how do banks like us create a unified experience for our clients so that they don't have to get into the weeds and think through, am I choosing one rail versus the other? What sort of experience am I going to have? Am I going to send a slightly differentiated origination experience for one rail versus the other? Are my reconciliation files going to look very different? So we need to make sure that we abstract the complexity and the differences that perhaps potentially exist between those two rails, create a unified experience, and make it simpler for our clients to be able to adopt it.
Sounds great. And I guess building off of the use cases that you mentioned there, how has US Bank been looking to tap into RTP then? And what trends are you seeing from your customers in terms of how they're looking to apply this?
The biggest trend that we see is really around payment transformation. So when I kicked off in my Nielsen numbers, I'd mentioned about our CFO survey report. And from the same report, what we are seeing is that the barriers to change, so barriers around payment transformation are falling. Just in terms of numbers, we had about 29% say that the biggest barrier to change is reluctance and resistance to change in general, right? And this is down from about 40% last year. So we see big leaps and bounds being made in barriers to change falling and reducing in order to support payment transformation of this scale. The second trend that we see is risk mitigation and automation. So we keep thinking about whether faster payments is faster fraud. And that is absolutely not the case. And more financial leaders are talking to us about how an integral part about transformation for payments for them is also to ensure that their payments, their data is more and more secure, and it's not being exposed any more than they need to execute the payment. And finally, I think a lot is being driven by customer experience. It continues to be a top three priority amongst our survey takers, our customers. We are talking about how our clients are incredibly focused on creating these differentiated customer experience and how they feel that is going to be fundamental in driving their revenue and business.
I guess the US has historically been a bit slower to adopt digital payment methods such as contactless and open banking payments. And there's still some industry players still not utilizing RTP. I mean, what do you think needs to change going forward then to speed up the adoption of new payment methods?
Yeah. In my introductions, I mentioned that I've had the unique vantage point of having lived and worked in India, Korea, UK, all of which have undergone the faster payment revolution a while ago. But they did it, they've had the luxury of time, right? So I would say that the US payment system does come with unique characteristics, and the revolution, the emergence of some of these new rails has come later to this country. So I would say, while it may seem like we are in early stages, but there is an incredible amount of momentum. We have seen that RTP usage has accelerated now with FedNow service. The excitement has grown tremendously. So for us as a financial institution, the value proposition that we are creating for our clients, which is safe, efficient, real time payments that are available 24 by 7, is incredibly strong and resonating very, very well with our customers. And honestly, I think as we get towards a ubiquitous adoption, it is not just about speed. We see the drivers of this demand also being through for data rich payment movement, for payment certainty, and then this availability that, this is not a rail that shuts down at 5 p.m. This is 24 by 7, which is more aligned to how our customers are increasingly doing business.
Excellent. You've touched on a few there, but I mean, what new use cases do you think could really spur the growth of RTP moving forward? And are there any new initiatives that you're working on at US Bank in this area?
I would say that right now, the use cases that we are most focused on are B2C flows, so business to customer flows. But another area that I think has the potential to change and drive a lot of volume is request for pay. And what request for pay is essentially a new way for our clients to receive money. And historically, we have continued to see traditional rails like ACH debits, but sort of in all reality, a lot of it is still paper. Think about it that your biggest payments, a mortgage payment or a rent payment, utility payments, a lot of those payments still happen on paper. And the continued existence of paper is for different reasons, right? There are populations that talk about how they fundamentally have a distrust. So, and they don't want to give access to their bank account for somebody to come in and take away these digital payments. But the other reality is that a large set of population has uncertainty around cash flow. So I don't know if I have to move money from my two accounts into one to consolidate in order to make my mortgage payment. Am I going to have enough money? So I don't want to give the control of some of my largest monthly payments elsewhere. And that has been the reason or the driver for a lot of these payments continuing to exist on paper. And that, I feel, is the winning proposition for request for payment. So request for payment actually puts the control back in the hands of customers. So whenever they are paying these large institutions, they control completely when they pay, they control who they pay. So I do feel that request for pay is really going to be a driver both from a consumer perspective in getting rid of their barriers and their hesitations that have continued to exist because of some of the legacy rails. But at the same time, because these payments are cleared instantly, they are certain, they are available 24/7, they become huge drivers for our institutional clients as well.
Excellent. Yeah. And I mean, you touched on this slightly earlier, but payments fraud at US businesses spiked last year. And with the rise of technology such as generative AI and deepfakes, fighting against fraud is a constant battle now for financial institutions. How difficult is it to keep ahead of the fraudsters in the industry at the moment? And what kind of work have you been doing at US Bank to protect people from scams and fraud?
We are a bank, so protection against fraud is not something new for us. That has been our continued focus. But with the increasing sophistication of fraudsters and the technologies that are able to originate these fraud, it just means a higher focus and a higher amount of sophistication from our perspective. So we are being very deliberate around the security of our customers' payment activity. It continues to be a top priority for us. We have implemented several real-time fraud risk monitoring systems to make sure that we are continuing to proactively look at our customers' activity and are able to stop before the fraud happens. We've also taken a more proactive approach towards customer education and customer notifications, because what we've realized a lot of times, these fraud is also user driven. So we need to make sure that we equip our customers with the right information for them to be aware on how these instant payments are perhaps different from other payments. And we want them to feel the control while being completely knowledgeable about these payments so that we can benefit from what is good in these payments without having to worry about the fraud that might follow.
Excellent. Yeah, thanks, Anu. And just to finish things off then, I mean, I know we've touched on a couple of points over the course of our chat today, but what do you think is next for the payment space in the US then? And what are some of the payments technology developments you're most excited by in the industry right now that you think are key to focus on?
For me, I think embedded payments and seamless payments are perhaps what excites me most. Some of my most exciting experiences outside of a bank are the ones where I don't have to think of how am I paying, where am I paying, where am I tapping, none of that sort, right? I don't know if you've had a chance to visit an Amazon Go store. There is an Amazon Go store right across the street from my office, right? I go in, I pick up the things that I need, and I'm able to run back. I'm not standing in a checkout line. I'm not having to fish through my wallet for a card that I will now need to swipe, tap, enter, and put in my PIN. So for me, it's all about creating these seamless experiences, reimagining some of our day-to-day experiences, which are enabled through payments, but how to bury these payments deep within the experience so you are not having to pause and make a conscious choice. The payments just seamlessly happen. That for me is the most exciting point of where I see the industry evolving.
Thanks again, Anu, for chatting with us today. To close out the podcast, we have our now infamous FinTech Jail. So this is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of. Or, of course, you can advocate to free one of the previously incarcerated terms. So what would be your selection for this week?
Comprehensive digital transformation is the trend that I think is overused in the industry, because all of us realize that transformation is important. But when we start thinking about comprehensive digital transformation, that can be intimidating. That can almost deter progress. That can almost make statements like, well, if it's not broken, let's not fix it, right? The point that I'm trying to make here is transformation is necessary, but transformation can be achieved in small incremental steps. For me, progress over perfection is perhaps my mantra, and transformation can be achieved by breaking down your entire exercise in small, meaningful, achievable steps rather than trying to get your moonshot and have it right in the first time round.
Definitely. I mean, it feels like transformation is often a constant anyway that's ongoing throughout businesses? I mean, is it now just outdated then to say that you're undergoing one big comprehensive transformation, then boxing everything under that banner?
I think so. I think to think through that one big transformation requires an incredible amount of both an investment from a dollar capacity, from a technology capacity. And that can often feel like, well, if we don't undertake this, then we are not able to see the value for the business. That is not what is true. You can start building these small areas of introducing, like I said, foundational, small level transformation, seeing the value and then taking it one step forward. So that's perhaps a comprehensive, holistic digital transformation is perhaps what I'd like to put in jail.
Yeah, well, no, I completely agree with you there. So I'm more than happy to add this one into the jail this week for what I imagine will be quite a long spell as well. I can't see anyone wanting to break this one out too soon. But Anu, thank you so much again for joining us for the podcast today. It's been a pleasure.
Same here. Thank you so much, Paul. Really enjoyed this conversation.
That's all we have time for this week. Thanks, of course, to Anu for joining me. As for FinTech Futures, you can find us online at fintechfutures.com, on X at FinTech Futures, and of course on LinkedIn. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support, and we'll see you soon for another episode of What the FinTech. But until then, goodbye.